Hey, hello everybody. Welcome to OptionPit.com. It is I, Andrew Giovinazzi, Chief Operating Officer of OptionPit.com, Director of Education, hedge fund risk manager, all these many things here at OptionPit. So what do we have today? Check out Mark on Kramer, mentioned this morning. I think Mark wanted to get long SPY on Friday, probably not a bad idea. Also, check out our blogs and our posts. We're blogging every week. Pretty timely blogs. VIX rallies, but near-term implied vol is flat. I said buy some VXX puts and maybe just a junk SPY put for protection. So actually a couple of good ideas last week. If you like following volatility, our blog, we're getting it back up to like what I would call a normal speed. So it's a pretty good blog if you like real ideas. We don't like putting out anything that's junky. Also, Vince, our next masterclass, portfolio management using options for investors, money managers, and RAs. This is using options as stock replacement for a better yield. Actually, just listening to the chat room this morning, an idea we had GE where we had a ratio of put spreads over like long straddles that paid. Today is just one of those days where it's going to pay a lot better than the strategy normally does. But that's the kind of stuff we'll be talking about in the masterclass. How you put these things on. Controlled put selling. It can be done. It all can be done. All right. So today, what do we have? Speaking of GE, I'll take a look at it. It's $11. It looks like the stock is breathing. We'll take a look. We'll probably recover the strategy in the chat room today. Charles Porter's asking, why do you think the VIX is up? The VIX is up because of the weekend effect. Charles, right? Almost every Monday VIX should be up. This morning, it was actually down substantially on the open. What we were trading, what, 13.20? It was not down like a dime. But adjusted for the weekend, that's like 50 cents. So for our vol newsletter, I put out making sure you just close some of your puts. Because you had like a very kind of what I would call just a quick gain, and it's going to be harder for volatility to walk its way down, right? Because we still have this trade thing coming out. I mean, it's not settled, so the idea is how low can vol go? Well, you can get a little idea where I think we're trading 13.25, right? And now things are starting to walk back up. We have the March 19th is expiration, so we still have 3 solid weeks. So this morning I was looking at about $1.40 in future premium, which I think was normal for 3 weeks. And now that's gone. So we're going to now sort of wait, right? We're going to wait to see how I think the trade talks develop. So I think there's opportunities in regular SPX. We're still going to, I think, going to see pretty decent movements. We'll look at some hedge time spreads. Ideas like that where I don't think VIX is going down, right? So it's not like it's going to go to 12 or 11 tomorrow until this trade deal thing is over. So we have what I would call stable vol. So you want stable volatility trades. Those could be time spreads for direction. I think probably would be the best at this point. And when you took a look at what's going on here, if I flip this up a little bit, right? Right, we have a 13 VIX, and we're starting to see like all of a sudden all this vol is starting to pump a little bit, right? Our weekly vol, everything started changing a little bit. Obviously, the quarter's going away today, but we all of a sudden have a little bit of backwardation in the vol term structure for the weekly. So that usually indicates the market's looking for a move in the relatively short term. So I think we could put together time spreads versus a put, something along those lines, where all of a sudden, they were 2807. It's been a while. We're now through 2800. I wrote a blog on that 2 weeks ago. So the idea is, what can we produce out of this? So it's looking like we want a little bit, again, that upside has a little bit more in play now that the trade deal can happen. All right. So that's what we got. Is this a fadeable move? I don't know. I was just looking at some of the other stuff I look at for volatility, and it's not quite, I'm not seeing any values that look worth selling. So anyway, there we go, as it refreshes. But I don't see any values that are worth selling yet. So I think time spreads, something like that, a little better. Equities off to the races too. So lower vol, I tend to like buying the vol, selling vol and vol products, and then letting it roll. All right. That is our vol report. Our masterclass, it might be pushed back 1 week. I am not sure yet. But look for some dates pretty soon. It's saying we're starting March 5th, which is next week. It might start 1 week after this. I'm not sure. Okay. And with that, I will see you all later.